Welcome to our Money Insights webinar series. The topic for this webinar is home loans. I'll outline the 5 proven strategies you can use to save money on your home loan repayments and pay your home loan off sooner. Let's look at the first strategy, which is the simplest but most important. And that is to find the cheapest home loan you can. But be careful. There are all sorts of deals available for all sorts of loans, and it's a big job wading through all the documentation to find out the real interest rate and to uncover all of the fees. While one loan may have a cheaper interest rate, it may have higher monthly fees, and there may be exit penalties if you discharge a fixed rate loan early. Another lender might tempt you with a cheap so-called honeymoon rate, but then charges high rates of interest and high fees after that period elapses. And then there are other loans which seem to be a little cheaper until you work out that they don't have all the bells and whistles the other loans offer. So how do you fight your way through this maze? The best way is to have an expert do it for you. For example, our home loan consultants spend every day comparing home loans and using their knowledge, computer modelling and loan comparison expertise to find our clients cheaper loans on a like-with-like basis. The result is that we are saving our clients a small fortune in fees and interest repayments. The savings could be tens or hundreds of thousands of dollars over the life of the loan. This comparison becomes even more interesting if you can plough that monthly saving back into your home loan. For example, if you have a $500,000 home loan with a 30-year term, you could pay off your home loan years sooner and save a small fortune in interest by finding a cheaper loan and using the monthly repayment savings for extra repayments, as shown here. Let's move on to the second strategy. Paying extra off your home loan, either on a regular basis or with the help of a one-off financial windfall, can save you a small fortune in interest payments over the long term, especially when combined with finding a cheaper loan. Here's a couple of ways you could do that. Firstly, if interest rates fall and therefore your required monthly repayments fall, try to maintain the old monthly repayment as a way of making extra repayments. If you are a recipient of a one-off financial windfall such as a work bonus, lottery win, redundancy payout or inheritance, it can be a wise strategy to use some or all of that money to repay some of your home loan. Another useful strategy is paying your mortgage fortnightly rather than monthly. This works because you effectively pay an extra month's repayment each year. You simply divide your monthly repayment in 2 and pay that amount every fortnight. This strategy seems simple, but it could save you a lot of money, as you can see here. Can you afford to pay a little extra off your home loan each month? Even reasonably small amounts can make a big difference because the extra you pay comes straight off the principal, and this will result in ongoing interest savings. For example, let's say you have a $400,000 loan over 30 years. If you can afford to pay just an extra $600 a month, you'll pay the loan off much sooner and save a lot of money in interest. Most home loan providers calculate the interest bill based on your account's outstanding daily balance. So if you can reduce your daily balance, the interest you'll be charged will be reduced. One way to do that is to use a 100% offset account. This account sits on top of your home loan account and has direct links to your home loan. Your home loan provider treats money you have in your offset account as being in your home loan account. Therefore, the daily balance on your home loan account is less, and the interest they charge you is reduced. But importantly, you can withdraw your money from the offset account whenever you wish. Until then, that money is effectively earning an interest rate equivalent to your home loan rate, and this is tax-free. Here are a few ideas on how to use an offset account. The first strategy is, rather than using a cash account which offers an inferior interest rate compared to the interest rate on your home loan, keep your spare cash in your offset account to reduce your daily loan balance and save tax. You can withdraw this spare cash when you need it. Another idea is, if you receive a windfall like a bonus from work, park it in your offset account rather than a cash account until you are ready to use it. You may also be able to arrange for your salary to be paid to your offset account to reduce your daily balance. You can access this money as you need it to pay for living expenses. Another strategy, if you arrange for your salary to be paid to your offset account, is to leave all or most of it there for a full month. You can use your credit card to pay for your living expenses. Then, before interest starts being charged on your credit card, You can pay it off with the money in your offset account. Let's look at a case study. Let's say David and Jenny have a mortgage with a good interest rate and spend less than they earn, as you can see here. They want to know how they could pay off their home loan sooner. Our advice to the couple might be to arrange for their combined after-tax salaries to be credited to their offset account each month, use their credit card to pay for living expenses, pay off the credit card at the end of the month before any interest becomes payable, park their spare cash in the offset account, and use their excess income to pay extra each month off their home loan. The end result is that the couple will pay off their home loan many years sooner and save a small fortune in interest. Do you have a number of loans with differing terms and interest rate charges? If you do, it might pay to consolidate them all into one loan, usually a mortgage, because it usually has the lowest interest rate. Here's an example. Let's say this couple has a car loan, credit card debt, and a $300,000 mortgage with monthly repayments as shown here. We would advise and help this person to find a cheaper home loan, borrow the entire amount as a home loan using equity in their home to fund the extra debt, and pay off the car loan and credit card. Their monthly repayments will now be significantly less than before, as you can see here. The key now is to make sure the couple use these monthly savings wisely. For most people, that means maintaining the monthly repayments they had originally. This strategy ensures they quickly pay off the part of the new loan that relates to the car and credit cards, and then gets them ahead on the rest of the new loan. In this case, the couple will pay off the entire loan many years sooner and save a small fortune in interest repayments when compared to paying off the loan at the required smaller amount per month. As you can see from the preceding 4 tips, it's possible for you to save a small fortune on your home loan. The key is to ensure you use a combination of strategies which best suits you and your budget. That requires a lot of planning, computer modelling and research. We have the experience and resources to advise you on which strategies you should use and when, and also to help you avoid the home loan pitfalls. In doing so, we can help you to pay off your debt sooner and maximise your interest savings. Thank you for watching our webinar on how you could save a small fortune on your home loan. If you would like an obligation-free assessment of your mortgage, or if you're about to buy a home, please contact your financial advisor or mortgage broker. For more information on home loans generally, please visit our website. Thank you.
This webinar is of a general nature only, and the performance figures presented are not indicative of future performance. Given that most people have fairly complex financial situations, you therefore shouldn't take this information as personal advice. Everyone has different financial situations and requires solutions and plans which are tailored to their individual situation, and we will be pleased to provide you with that personal advice if you wish.